All right. So, tonight's class. I don't know if you guys watch NBA playoffs. I do have the heat down in the background, so it might look over. But I'm basically gonna be going over my model, and I'm also gonna be going over like a few predictions for next week. First prediction is I'm bullish on Euro. So I'll definitely be looking for some sort of long setup on Euro. Okay, and the reason is because we're holding this daily inverse fair value gap, so I really want to see a long setup. Okay, and this is actually a good example to start with. So my model it's fairly simple. It's kind of like the 2022 model, except what I do is to have a higher win rate. And by the way, this model I'm going to be pointing out, okay, a lot of my straight up alerts in my premium live channel, which by the way, I'm closing my premium again probably in the next few days. A lot of my alerts I do that I call directly out, a lot of them are this model because this is the one I feel most confident with. But it's the 2022 model, okay, with a little bit of what the hell? Sorry, I just saw something. All right, it's a 2022 model, but I adjusted it so instead of like just a normal fair value gap, and we take sell side, so something like, let's say, let me see if I can find like a good example real quick. Instead of it being like a 2022 model, like for example, this might be the 2022 model. Okay, let's say this is a fair value gap, which technically this is. Okay, technically this is the fair value gap. It's obviously not like a textbook one, but pretend this is a fair value gap, right? My model is this, right? This is the 2022 model. You can see we are rejecting a higher time frame PD array, which would be this fair value gap right here, which, by the way, if you guys are in my premium, I said look for shorts out of this, and it just took forever to play out, and this is just a really strong spot to look for shorts in. And so yeah, 2022 model is we're rejecting a higher time frame fair value gap, then you kind of, this is the confirmation setup. And the reason why this is the 2022 model is because you can see we kind of there's relative equal highs here, and we purge those relative equal highs, right? So we take out all these stop losses, and it's just a simple, you go up, it's 2022 model, you short the fair value gap, right? So it's the fair value gap, this is what you short. But with my model is, what I need to see is I also need to see like bullish PD arrays violated. Okay, so I'm going to draw this out real quick. So if we think about how market structure and how market works, right? Okay, let's say there's buy stops above here, above this red line, okay? So buy stops above here, and what we want to see is a market structure shift or something. So I tweeted this out one time, but I think the best possible market structure shifts are the ones where we take sell or buy side and we violate a bearish PD array. So what I mean by this is you can see we make a higher low right here, okay? And this is like the straight up model. And what a lot of people don't look for is this higher low being made off of some sort of bullish PD array, okay? So is there a bullish PD array, whether it be an order block, fair value gap, supporting this higher low, or is it just chop? Okay, this could just be chop over here. There might not be a fair value gap, and then we might break this. Okay, so that's like the difference you want to look out for. So if there's chop right here, and it's just this is a random bounce in the middle of no man's land, then what I notice a lot of times is this is a fake market structure shift where people might label it as a market structure shift, but we're still not violating any bearish bullish PD array. So what happens is we make a higher low here, but the higher low is kind of in no man's land where it's just we make a higher low in the middle of nowhere. And what happens is we just go back up to the high again. And this is where I know a lot of you watching probably right now struggle because you think this is market structure shift, but it's not a good one. And you end up shorting a fair value gap right here and we go back to the high. Okay, so my model is I need to see a bullish fair value gap here telling me, okay, we made a higher low inside the bullish fair value gap, so something like this, and this is a meaningful zone, and I need to see us at the same time we have like the quote-unquote market structure shift, which would be breaking this low. I also need to see a fair value gap or order block violated at the same time, because if this happens, the chance that we go back up to the high is going to be very more slim than if we were to go hit this fair value gap. Because if this is just a bunch of chop and this is just a random higher low in the middle of no man's land, right? There's not really anything in the left side, the sell side of the curve or the buy side of the curve, blocking us from going up. Versus now, there's kind of old buy orders here that we also violate, and we violate the orders here. So it's like, if we get a bullish fair value gap here, right? Let's say this is a bullish fair value gap. We know there's going to be a lot of buy orders sitting here. So there's buy orders here. And then we take out, we have more buy orders here. So it's kind of like a double pair of buy orders being taken out, versus if this was just chop, right? If this was just chop right here, probably not too many buy orders right here. Okay? So this is kind of the reasoning behind why I love the setup so much, like, and why I look for like an inverse fair value gap as well, because it's kind of like double the, not like a supply and demand zone, but it's like double the strength that's getting broken. So it's like, if we're talking about strength, right? No fair value gap, let's say, equals 1 time strength. Okay, two fair value gaps equals 2 times strength, right? So if we're violating 2 fair value gaps, right, the fact that the kind of confidence I have in the market expanding the way where we violate, like let's say we violate a bullish one, I'll be more confident that we keep going down if we violate something that has like 2 time zones, two fair value gaps, right? So that's kind of where the psychology behind this model comes from, right? And it's so good because it's just highly accurate, and just a lot of people, what happens too sometimes is the people who do have their orders here, right, or hedge funds, whatever it may be, right, they're also, not only are they get stopped out, but what they're going to try to do is they're going to try to reverse their position. So they're going to try to get it out for break even. So they're going to buy a bunch, get out for break even, and then try to go the other way and hedge themselves. So it brings the market back up to where we violated, and then we just keep going back down. And this is what large banks can do. This is how banks get out for break even instead of a loss. This is why they're so profitable, right? Because they're able to bring the market back up, reverse the position, right? If they're expecting us to bounce off this, but we don't, they're like, oh shit, we just fell under the spot. I was like, they're probably surprised you didn't hold it. So now what they want to do is they're going to be like, okay, well now we violated that spot. We're now going to look for shorts, right? And then this is where they kind of bring their shorts back up. But if you really think about it, if we get a lot of consolidation over here and no fair value gap, my mouse is frozen for some reason. Oh, it's because my mouse died. Give me 1 second. I'll keep talking. So basically, if we have consolidation over there and not a fair value gap, do you really think there's any big buyers from these banks there or anything? Probably not. So probably definitely a less chance that they're going to reverse their position, because they probably have no position if we get consolidation, versus if we were to have a bullish PD right there, it'd definitely be more likely. So let me just plug in my mouse. So again, it's just kind of, hopefully, do you guys understand what I'm trying to say about this? How there's chop here, there's probably not a lot of big buyers, but if there's not and there's a bullish fair value gap, it's more meaningful. Okay, perfect. So hopefully you guys understand that. So that's kind of the psychology behind this model. And this is just, it's why I love it so much, okay? And by the way, if you are in my premium, okay, I did send out the homework for the week. By the way, this doesn't look like a bad long setup. If you are in my premium, we should hit this high, and then we should hit this high. If you're on my premium, I did send out homework for the week. Your job is to find one of these models and then post it And this should hit in a second. Your job is to find one of these models, post it. I'm gonna mention a few of them in stream this week, so you'll be able to see them. But that's gonna be your guys' homework for the week, and obviously you're gonna have an easier time if you look back after this class. And the only exception who does not have to do is Eric, because apparently Eric's too old. Okay, so there's the first high. So there's my target, right? Why do I think this is gonna work? Okay, this is exactly what I'm talking about. Someone go on the chart right now. Okay, show me why this just worked based on this class tonight. I'll give you guys a few minutes. Go in your chart and post what I just saw here. And this is the 1 minute chart. Why did I say that this is going to work, and why did I say we're going to hit this high? Someone post a chart. It's one thing. It has to do with the class tonight. I want to see a chart. It's one box you draw out. There's only one box. I know someone knows what I'm talking about. It took sell side? No, nope. Well, wait, did it take sell side? It did not take sell side. Well, technically it did. It took these equal lows, but... Alright, someone have it? Let's see. Alright, okay, so very close, AB. AB's, yes, you can post it here and more. Is that the 5 minute or more? Alright, so that's one of the reasons. So Moore's got the first reason. There is the second reason in the higher time frame. It's a higher time frame. I'm not telling you what time frame, but you'll see it right away. It's based on what I'm teaching literally tonight. It's my model. Alright, Lewis, post it. What am I talking about? Yes, exactly. Inferno got it. Alright. Exactly. Okay, Josh Hash got it too. So, if you look at the 5 minute, I've seen the 4 hour wherein, what the hell? Gigantic 4 hour. But if you look in the 5 minute, right, what am I teaching? I'm teaching my inverse model. Okay, what just happened? In the 5 minute, we violated this, right? And I want you guys to realize something, okay? Look at this candle right here. Okay, the low of this candle is 14,532.50. The close of this candle is 14,532.50. Okay, is that not algorithmic? Okay, bodies tell you everything with these inverse fair value gaps. The second you see a body close above this inverse fair value gap, right, and we were relatively low, and in this range we are relatively low, right? Why are we relatively low? Because if you draw a premium discount, right, we're in the discount range at the moment. Even though we're expecting sell side, we're still relatively low. But because we're relatively low, and because we took out some relative equal lows right here, okay, this is the long setup. This is the exact model I'm teaching, okay? And what I wanted to see is we need this violated, okay? Where did we violate this? We violated it right here. Why did we violate it? Because we actually closed above and it was a nice strong momentum candle. So the fact that we kind of closed above this, right, your long is now right here on this. And it's up to your risk management, but if you're longing, you could long right here, and obviously, as I pointed out, your first target would be this 1 minute. You could long right here, or you could long down here. It's up to your risk reward. What you can do is you can long at the CE of the inverse if you want, which would be right here. But sometimes what you're gonna notice is you don't hit them. So That's one thing. Okay, so if you want to get into play every time, you have to long up here. If it's too big, if the stop loss is too big, which I'll go over the stop loss in a second, you got to long at CE right here. Okay, it's up to you. And then your first target would be right here, and then you put your stop to break even. Second target would be right here, and obviously the second target didn't hit, but at least the first one did. And again, why does this work so well? Because there's a bunch of sell orders right here. You can see how big this candle is. It's definitely not retail traders. It may be actually because it's after hours, so probably not that much volume. Okay, but again, these are violated. The second these guys see us kind of violate this, they're gonna try to reverse their position. So they bring price back down, and they reverse their positions for us to go back up again. Okay, and right now, by the way, I overall think we're gonna. This is my really target right here, 14,433. I think we're too high to be longing. I understand there's a 4-hour order block here. I want to see us kind of violate this mean threshold before I think we're gonna go here for sure. But really overextended. So going into tomorrow, if we can kind of close beneath this mean threshold, this is gonna be my target down here. So that's kind of my game plan for now. And I think NQ, if you guys want to short NQ, do not short ES or YM. I think NQ is going to be the weakest. So again, right here, you can see this was violated. Okay, and then what they do is, there doesn't have to be a fair value gap here. Notice how there's not a fair value gap here. If there is, it's obviously better, but there doesn't have to be. Okay, but what there is here is there's an order block. So there technically is a double confluence. And this candle's annoying me, so I'm just going to go in replay mode. But again, this is an order block, right? There doesn't have to be an order block. There doesn't have to be a fair value gap. But again, as you know, it's double confluences with this, okay? With this being here, this is a double confluence. There's an inverse fair value gap and an order block. So that's obviously something you want to see. And again, this is literally my model, okay? And the reason why this works is because they reverse their position, right? These large people see this is violated, so they reverse their position. And it's also good because if I'm expecting this to work for a short and it doesn't, then why wouldn't it work as a long, right? If I'm short biased and I want to short this, I'm going to short it, get stopped out, and I'll be like, okay, well, it got violated, so now I'm going to reverse my position. So it's almost like if you don't enter the short position in the first place, it's basically you're not even taking the loss, and then you're kind of reversing your position, right? But this is a little more advanced what I'm saying right now, and some of you, this might go over your head a little bit, but this is not something I would look to short in the first place, okay? Because obviously we've unbalanced stuff up here, and it's kind of low at this point. So the short was up here, okay? So I wouldn't even look to short this in the first place, okay? But let's say I was, and I got stopped out, well then, it's like what I'm trying to say. It's like, okay, you now reverse your position, you know. It's like if you get stopped, you reverse your position. And a lot of retail traders, they get stopped, and then it goes their favor. But obviously, we're a little more advanced with price action. We understand what's going on. So when we get stopped, I'm sure over 50% of the time, if I had to guess, over 50% of the time we all get stopped, price keeps going to where we get stopped because we understand where to put stops. It doesn't happen to us as much as guys using these retail patterns where they get stopped and it just goes their way. You know, so again, this is my model. Okay, now I'm going to go over gold. Okay, so I'm going to show you a time where the model would not be my model. So this is gold. Okay, just how like we use ES. All right, and now look at this fair value gap right here. Okay, what's the difference between the fair value gap I just showed you and this kind of setup right here? What's the difference? Why wouldn't this be a good long? Or why would this be more? This is not a bad long, it's just 50-50. Yeah, exactly. So we never actually violated this versus an NQ. Okay, on NQ, we did violate it. So on NQ, you see price keep expanding to where we violated it. But on gold, even though there's a bullish fair value gap here, did we ever really violate this? No. Did we ever violate this order block right here? No. Okay. And I am maybe guessing this might work. So, and then right now, obviously, we're inside a 5-minute fair value gap. Okay. We have bearish order flow, right? I wouldn't really look along this yet. You're probably wondering about this. So I love the ones where you can see, like, there's only one inverse fair value gap. See how, like, in this example is tricky right here. But like here, see how this is the only bearish fair value gap? Those are the types of setups that, like, I only want to see one. The fact that there's two here just makes me not really interested in this, right? Because we did violate this one, but do we violate this one? No. So I would prefer if there's one, because it's a single fair value gap, gives you higher confidence. What I will say about this one is this is not bullish yet, because even though we violated this one, this is the one in premium. Okay, so you want to see the one in premium violated. But let's say there's no fair value gap here. So let me cross this off. Let's say there's no fair value gap here. If we do violate this one and there's no fair value gap here, and this isn't discount, okay, then I would still use this. But because there's another fair value gap or premium in this one, I would use this now, right? Because violating a fair value gap or discount doesn't tell me anything, unless it's the only one. But is this the only one? No, it's not. Okay. But anyways, yes, I agree, Stout Poppy. Wicks through the damaged bodies tell the story. That's why I always say, watch to see if we close above or below the fair value gaps, not the wicks. The wicks don't really matter. Okay, so right here, okay, did we ever close above this fair value gap? Nope. Right, so is this ever violated? Nope. So that's that. Let's see if we can find like a live example. I can't really find one here. Let's see here. So this is a live example playing out right now. This is more of a screen time thing, okay? This one right here, okay? So if we draw a discount the premium, I guess I'll draw it from right here to here. Okay, we can see this is in premium, which is the fair value gap, and this is in discount, okay? So I like to see the one, if we're looking to short, I like to see, if there's two or more fair value gaps, I like to see the one in discount violated. However, in this situation, it's different, okay? And this is where my screen time and intuition comes into play, which you guys still have to gain. But in this one right here, right, this is something I really can't explain. I saw this video the other day in TikTok by the Niconomics kid or whatever. He kind of explained, like, we could be looking at the same chart, but intuition is going to, like, intuition, if you have 10 years experience, you might see something different than a trader with 6 months or a year looking at the same chart. So this is kind of just one of those situations. So I always say, I don't like the ones with two fair value gaps. However, if you look at the size of this fair value gap, this one tells me more, because if we were bullish, you would probably bounce off this one because it's bigger. But because we violate this, okay, let's go back in the replay mode. Okay, let's say we bounce off this, came up to here. Would I short this? Yes or no? And why not? What I talked about in my live stream on Friday. Why would I not short this? I talked about this in my live stream on Friday. Not confirmation. It starts with the word D. Where are we? Yeah, exactly. It all depends on where we're delivering from. So right here, I see that we broke this, which ideally for bullish we should bounce off of it. But if we were to bounce off this fair value, get back up to here, then no, I would not short this, because really all this is if you drop discount premium, this is all this is a bounce from discount. So if we bounce from this fair value gap, I'd expect us to go hit this high. Okay. But now what do I see? I see this fair value gap violated. So now, until you violated both of these, I still wouldn't want to short this one. Why would I still not want to short this one? Yeah, because it's still kind of low. Like, it's not in premium. And the other reason is just if smart money wants to short, right, and we want to be right, then the last possible spot they're going to short is the last possible entry, which would be up here. Okay? They may average in here, but the last possible spot you can enter is right here, right? There's nothing to enter off of up here. This is already rebalanced. Okay, but we're in discount, so still love to see the short. Okay, what if this fair value gap wasn't here? What if this wasn't here? Would this be a better short? Yeah, I would agree. Okay, so even though we're in discount now, I would say this is short would probably work if this fair value gap wasn't here. But the fact that it is, I would expect us to retrace the premium because it is. So that's just more of a screen time thing, and that's something where you're gonna see this stuff work, like, and you're not gonna fully understand it. But that's just a you're gonna have you're gonna see these setups. And whether we have one fair value gap, two fair value gaps, or more, that's gonna change the whole setup. So you can kind of see like how I look at this different, or I view this differently. Do you guys see how I view this differently? You understand how what I just taught, right? How I view this differently. If this was here or not? Yes or no? Yes, John. So again, it all depends on if the fair value gap's there, where it is, if there's one or two of them. Like I said, I prefer setups where it's only one inverse fair value gap. There's obviously two here, so I don't really prefer it that much. But if I did it at the short, you'd short in the premium zone, which would be right here. And I like how this also matches up with a second fair value gap, right? So you can kind of see it matches up. And this is obviously another double confluence, right? So just a better short overall. And now I'd expect price to go down and hit this low because we're delivering from an inverse fair value gap and a BPR. We do scale time frames to try to get, yes. The fact that I see this is two fair value gaps, what I'll do is I'll go to the higher time frame and I'll see if it's one. Look how perfect this is. Is this one fair value gap now? Yep. Is it a premium? Yep. See how I do this? So that's a good point right there. Do you guys understand how I do this? Yes or no? So again, if there's ever multiple fair value gaps, I'll check the higher time frame just to see if it merges into one. Okay, and again, like I said, there's gonna be a lot of buys here. They see this violated. What they do is when we wait back into it, they reverse. But again, I only prefer them as one. If you even go to the 1 minute, right? There's 1 minute's just too messy for the setup I'm showing. I mean, this is a really textbook 1 minute short right here, which you don't really need an inverse fair value gap for. There's like 50 different models, and these 3 time frames alone. But the model I'm teaching right now is just this basic inverse fair value gap model. You want to see it violated, then you look to reverse. And because of how, like, if you look how high we are. So this is bound to work, right? We're just so high. And we take out buy side. In case you go back, test the inverse fair value gap and leap. Wait, what do you mean, sniper? And in this situation, what do you notice? You can kind of see we close back under this, and then we use it as resistance. Would I have shorted this? No, I would not have shorted that, because I typically use a fair value gap twice. This is kind of a third time where it's just hit or miss at this point. So I wouldn't really use it a third time. In hindsight, sometimes they work, sometimes they don't, but really only the second time I'm more confident about. So do you guys, how well do you understand what I just taught in my model? Am I explaining this well? Okay, perfect. And we're kind of in a live example right now on UnQ, okay? So if you look in this leg in the 15-minute, there's only one fair value gap in this whole leg. Where is it? It's right here. And did we close under it? Yes, we did. Okay, and then what happened? We wicked back into it a hair and then just dumped. Okay, so obviously the risk reward would be something like this. Okay, and remember your stop loss is always a close back above. It's not a wick above. It's a close. It's a body close back above. Okay, and obviously this would be a target. And what happens sometimes is, if we were to make it down that far, that was like a 38, 20-point move. So if we go back up here, I would probably just get south break even and look for a re-entry. It is what it is. Depends on your risk management. Some people like, if I'm up 20 points in NQ, there's no way I'm not moving my south break even. Free trade at that point, right? I'm gonna do it. And my accuracy is high enough to where I can move my south break even, just look for a re-entry, you know. Anyways, there's still a possibility of this happening, obviously. Obviously, I want to see us go right down, but just in case this happens, right, some people will hold through this. They will enter here, and they will hold if we go higher, but the true stop loss is it's always, always, always a stop above, or it's a close above, right? If we don't get a close above, you should not be getting stopped out, okay? So yeah, okay, now tell me what you notice in the 5-minute of NQ. Yeah, Sniper, those are not important enough relative equal highs. And they're inside a bearish PD ray, so no need to come back up to them. What do you see, without me pointing to what I'm talking about, what do you guys notice with the 15-minute or the 5-minute on NQ? Okay, I'll give you a hint. It's probably not where you're looking. It's about what I just talked about and why we wait for closes of candles. Does anyone know what I'm talking about? It has to do with the close and open of candles. What's the overall picture of this whole screenshot? No. It has to do with the fair value gap and the close of candles. Yeah, exactly. Amor got it. Yeah, exactly. So, looking back, this giant fair value gap, if you look, we wicked above it a few times. Did we ever close above it? Nope. So, this actually was never violated. And this just shows you how important the closes of candles are. Okay? And this is more of a hindsight thing. Can you still bank in hindsight? Yes, you can. Because if I just went to the chart right now, or when we opened tonight, and I see, okay, in hindsight, this is a lot of chop, but we still never closed above this. Does that still tell you we should be bearish? Yes, it does. So even though I kind of missed all this, right, when I come into the charts tomorrow morning, if we're still below this, that tells me the bias, even in hindsight. So it's like I can take a second entry. So it's like, even though this is hindsight and I see, okay, we never actually closed above this, even though I didn't short any of this, even though we never closed above it, still tells me where the draw should be. Okay, so it's technically not hindsight, but it is. It's using hindsight to tell you the next play. Does that make sense? It's using hindsight to tell you the next play or the next draw. Does that make sense to you guys? Okay. Good. So yeah. And again, like I said, I'm not using this a third time. I now delete this off my chart because it was kind of respected twice. Now what do? I just wait for a new fair value up to form, and you can see this is the one I would have marked now. Okay. All right. So that is my model. That's what I like to wait for. Okay. The last thing I will go over is this fair value gap right here. See how there's a double confluence? See how it lines up with this bearish fair value gap as well? This is going to be important for tomorrow, okay? There's also a third confluence here. This is more of a hindsight thing, though. Third confluence here. This is an old bearish fair value gap as well. Okay. We would not expect this to get respected, though, because we already hit buy side and we're just really high. So why would you even look? Why would you look for longs off this? But you can kind of see this is the third time we use it. This is BPR, so it makes sense. And if you narrow it up a little bit, okay, you see, I'm just going to change the color of this, but it lines up here. We draw it to this wick right here because it lines up with this full fair value gap versus if we drew here, this part does not matter. But you can see three zones. This fair value gap, this inverse fair value gap, and this one. The zones of confluence here. Which is why we probably didn't retrace any further. Yeah, Sarah, the strongest PD array. That is very correct. So with this fair value gap here, see how this is kind of big? It's like a 15-point zone. If it's ever like a really big inverse fair value gap, what I'll do is, it's just like if you guys watch my confirmation setup video I posted last night, okay? It's basically just like, okay, confirmation setup. I'm not going to blindly short the zone, even though you can if you want. I'm not blindly shorting this. What I do is I draw it out, and then I go to like the 1 minute chart, and I see if we get like a confirmation setup, so something like this, and then obviously like a market structure shift, and then a fair value gap to short like this, right? I'm not going to blindly short it. Kind of a big zone. But that's just me. Depends on what you're comfortable with. So I think that's about it. Do you guys kind of understand? Again, this is probably, if I had to rate my lessons I've given on Sunday nights and help you with your profitability, I'll literally just wait for I'll just study what I just taught like 50 billion times until you get it down, and then this is all you do. But yeah, this is just a really good lesson. So yeah, I think that's about it. And yeah, that's all I got. For our premium members, I'll be live tomorrow around 8:30 or 8:45. I don't know what time yet. I will not be here Friday morning. Let's go Heat. I hope the Heat win. It doesn't matter to me. I want the Nuggets and Heat to win. I think both of them deserve a ring. It doesn't matter to me, to be honest. Heat's more of an underdog story, though. Okay, so I will not be here Friday morning for my premium members. I'll make this announcement again because I'm going to New York City. But I'll be here Monday through Thursday. Obviously, after that, I'll be here the rest of the week and every day next week and the next week after that, next week after that. But yeah, that's all I got for now. I'll see you guys later, and peace out.